The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a beautiful Monday, September 10th, 2012. And what is today? It is Swap Ideas Day. And my idea is, how about Jell-O molds for Halloween? They have lots of ones. And if you go onto the web, you can find the correct food coloring to turn them into brains, hearts, hands, eyeballs, and more. Giving you plenty of time now to get something to eat. My mom would give me grapes that they pulled the skin off of, and what else? Spaghetti, cold spaghetti. That was supposed to be witch hair, and the grapes were supposed to be eyeballs. We had lots of fun for Halloween. I always remember that. But she always had a bunch of disgusting stuff that you had to look in or touch, but you could never see to see what it was. But just to tell you, it's witch hair, and it'd be stringy cold spaghetti, and the eyeballs, which were just skin off grapes. Kind of disgusting, actually, but I guess you can have a lot of fun. Anyway, for 15 bucks, you can get molds of brains and eyes and faces and all kinds of stuff for your end of the world apocalypse festivities coming up October 31st. And of course, nobody doesn't like a great zombie movie. And what would be better than a zombie fest on October 31st, being able to eat brains. Anyway, it is a beautiful September 10th at the headquarters of Technical Trading and Investing, TFNN.com. And we're going to have a good day. The market, as I checked in on it here, what do we got? Off about 2.5 points on the S&P. Volume's just now getting ready to turn 2 billion shares on the day. So we're finally coming out of the funk we had all the last 3 weeks of August, where the volume had been going down. At least we're starting to pick up some. Still seeing Tuesday, Wednesday, Thursday being stronger days. Of course, we're all in a potential hold for tomorrow, which is it's unclear exactly when it's supposed to be, but there is supposed to be a pronouncement from on high from the Supreme Court of Germany about whether or not they are able to have the bond buyback program and basically support all of Europe. Because basically when it comes down to it, they've owned 80% of everything over there, and it would basically be Germany bailing everybody else out. No one has any money except Germany, and it's not going to change anytime soon. My guess is they're going to ride off the warmer southern states and keep the maybe France, Germany, England. They're going to try to keep the northern and northwestern countries in the euro in it, but I think, like the Titanic, once it hit the iceberg, it was doomed. I can't imagine that the German people want to actually go through that. And if you look through their magazines, they're dead set against it. In fact, over the weekend, and probably since Wednesday, they've been savaging our wonderful EU leader, Draghi, in the German magazines. So it's going to be a lot of political capital if Merkel decides to sign on and the German High Court decides to go with them. The belief is that they will rule that it's constitutional, but it will have to have a vote by the people, and that vote by the people would no doubt fail. So they may, when we see that, it's probably not that it was allowed or disallowed, but what are the requirements to actually make it legal? And that will be the fly in the ointment. I suspect we're probably going to see some market turbulence around that. And then, of course, on Thursday we have the FOMC meeting. Tomorrow at about noon or 1 o'clock, the Apple rollout is coming out. We're going to see a lot of that. I've been pretty much talking a bit about how the news in Apple had not been very positive. It is off about 1.75% today at 668.45 in the last tick. I suspect and continue to suspect that they're going to have bigger issues coming down the pike. They're going to really have to pull a rabbit out of their hat, which no one's heard of so far, about some really new feature other than just LTE and higher res displays and spending more money. I suspect that we're going to find out that this display is, quote, a retina display, which is not their word for high resolution. One of the tenets of Apple marketing is to make it short, swallowable, and short, sweet, and swallowable. And part of that is not letting the customer ever see anything that even comes close to a spec sheet. So they don't want you to know that a retina display is basically 240 dots per inch. 300 dots per inch is on black and white. In color is a laser printer. When you actually use color, percepted resolution actually increases. So 300 dots in color opposed to 300 dots in black and white, there is a big difference in perception for the human eye. But 240 dots per inch is pretty darn good for color. Eventually, I suspect we're going to get something up to about 300 dots per inch on most of these displays. Maybe one day in a I don't know, galaxy far, far away. But it's going to continue to see weakness. I did do a Tech Insider, kind of a special Tech Insider that ended up being a lot longer than I thought of when I started, but it was my thoughts of the coming mobile war. And basically what I said is it's finally here. We've gone through the first skirmishes with patents, and I suspect it's going to get bloody and very messy from here on out, and really remind us of probably the 85 to 91, 92 era of the computer industry, where you had a lot of companies coming and going, huge successes overnight because they're in the right spot at the right time when the industry changed. And I suspect that Apple, along with some other companies, are going to have the short end of the stick. And I went through it in about 8 pages and explained why. But just like Microsoft, everybody wanted to tear them down. When they were the big fish, I think Apple's actually reaching that level of not being the second-class citizen or the underdog anymore, to going the bully on the street. And everybody likes to build everybody up so they can tear them down. My guess is Apple is not the first one of these big four horses of the apocalypse to go to $1,000. I suspect it's another company, and I laid down the reasons why. And just seeing if there's anything else really exciting out here in the marketplace before we finish up some more news. Just a few things that caught my eye. Amazon did come out with their tablets last week. Hardware's pretty good. No one's actually tested them so far. It looks like they're going to be out in October. There were a few questions that really weren't easily solved. One is that, according to Amazon, that you were going to have to endure their ads, and there was no way to opt out of them. They were pretty much savaged on the blogosphere over the weekend. This morning they're actually saying that you could opt out for $15. That may go to a long way for me using their tablets. They also say $50 a year for LTE and high-speed 4G interfaces in their more expensive unit, which is $500. What they have not said is what it will be after the first year, and just how expensive will it get. I also never saw anything about how much data you can use. I did find several entries, but not directly from Amazon, that quote 250 megabytes a month. Probably I can use that in a day. So that $50 probably not going to work for me very well. I can download a movie, and you're talking, probably even in regular resolution, you probably, I don't know, probably get fairly close. Standard DVD is about 450 megabytes. So yeah, one movie and you're gone. So I can't really see using that LTE other than for a few things. I really like that paper white thing that they have for the new basically text reader. And at that price, it might be well worth it if you're reading, 200 pages of a book. Especially with the lower resolution of color devices, might be a lot nicer. Especially the 8-week life cycle. If you read an hour a day on it, doesn't sound too bad between charging. But a lot of questions still from Amazon that are not out there and adequately answered. As far as I can tell, it looks like some of the weakness that we're seeing in Apple today is the realization that they're making half the money on tablets that they make on phones, and the phone business is drastically getting swamped by Android and now Windows 8 devices. And these things are not going to be as weak as competitors as they had been before. Chicago's teachers are striking today. I find it kind of interesting. I was wondering what they turned down, and average in benefits and pay was $76,000 a year. I don't know how far that goes in Chicago. Sounds pretty good to me, but they've turned that down, so we can only expect higher. I suspect this is going to end up being a big political football, but also probably going to depend a lot on how the war between private sector and basically government sector unions, the final war with the government and how that's going to play out. We've seen a lot of entities in California already go bust, not being able to actually pay these someone agreed to them, but not being able to agree with them and finally having to claim bankruptcy. I'm wondering just how much farther that a lot of that can go as we go between public sector and private sector unions. I think it's going to be very interesting how it plays out, because it's probably going to be dragged into the political election. We talked a little bit a couple of weeks ago about France going whole hog socialist commie. And I mean that in the nicest way. Socialism has never worked. Over 200 years of recorded history of trying to make socialism work, it's always failed. Someone always comes along, thinks that they're smarter than the people before them and will figure it out, and it fails yet again. Great book, The Politically Incorrect Guide to Socialism. Anyway, we'll come back. France's richest man says he's exiting stage left. There are a whole bunch of other that are ready to follow him. We'll be back in a minute.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back from break, we were talking a little bit about France, and they're talking about anybody making over about $1 million a year going to a 75% income tax bracket. That was about 2 or 3 weeks ago. And the new president of France basically pushing that through their parliament fairly quickly. Wasn't surprised to see France's richest man, Bernard Arnault, to apply for Belgian nationality. He is one of about 10 that have already applied to get out of Dodge, looking at this giant income tax hike. Doesn't really say what he's going to do about his property and the things he's got in France. He's worth about $41 billion. And it is going to be extremely expensive for anybody that wants to continue living there. He's 63 years old. Or how about those people that say years young? Oh, those people always irritate me. I'm 51 years young. I tell you what, when I wake up in the morning and my back's sore, I know I'm old. I may not be as old as other people, but I know I'm getting older. Anyway, so anyway, we're looking at this. He's one of the first 10. Looks like we're going to probably see a lot of people exit stage left out of France and anywhere else that tries that. The question is, do people really believe that people will not leave and dive on the grenade to give lots of their money away. And my guess is that some won't, and some won't. But France is already looking at a mass exodus of the people with the most amount of money, and it'd be very surprising to see that this doesn't work out. They may try to pass some laws saying that you have to give the money because you lived there for a while. The one bad thing that the EU did for these people that go after anyone like the one percenters is that you can move to a new country and they can't do that to you. That was part of being in the economic union. He'll still end up paying a bunch of taxes, but in Brussels, in Belgium, he will probably pay around 25 to 28% instead of the 75% over $1 million that France is looking at. Kind of interesting. On Wednesday, in the second half of the hour, I'm going to have Robert Greene on. I've bought a couple of products from him in the past. He does he's probably the only guy I've met. Maybe there are others. But he's one of the few people that is a trader's CPA and bookkeeper and accountant. We're going to have him on. He wrote a very interesting blog article about what's going to change for us as traders. Yes, things are going to change for us because some of the new tax laws, even if they are rescinded, some of these tax laws are going to hang on anyway, and he goes and shows the historical reasons why. But there are a few things that we can do about it as traders. But if you're making some decent coin, might want to tune in and think about these, even if you have a decent CPA. All this guy does is trading. And especially, I had to go to him for a couple reasons. One, because the broker-dealer I had went belly up, and I didn't get paperwork. We had to figure everything out, almost like a forensic accounting. But it is it's one of those things. Anyway, he's been of service to me. At least his company has been, and we're going to bring him on and talk about a lot of different things happening for us as traders that I was unaware of, and you can start planning for now. It is September, so we only have about 4 more months to go in, and he's got some interesting takes that you should probably talk about to your own CPA if you don't consider him or if you don't have one. Anyway, it is going to be an interesting day here at TFNN on Wednesday, second half of the show. Anyway, we're going to get to some other things fairly quickly. And how are we going to do that? See if I can get back up to my charts here. Again, you can call me at 877-927-6648, 877-927-6648, and we'll discuss whatever you would like to. And I wanted to get to some charts here fairly quickly and see how these stocks were doing. Akamai has been one of these companies that kind of came back from the dead years ago. It was one of the .com companies that came up. It's up here challenging these highs. We'll talk a little bit more about it when we come back, AKAM. In the meantime, give me a call. Let's discuss your stock. Maybe you have some comments about one of the stocks that we should be looking at. 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're looking at Akamai Technologies, AKAM. One of these stocks testing a high, fairly light volume. We saw the last big high April 25th, $39.09, 6.8 million shares at that high. We got into that over the last few days at the highest volume, 3.5 million shares. Actually got to 1.8 million shares on a slightly higher high on Friday, and a little lighter volume out here. One of the ones that after the huge gap up that we had on June 26th, or is that July 26th? June 26th. It looks like we're going to, you really didn't have much in the way of energy after that. I suspect that you've got fairly decent support back around the $32 level, but we're going to have to keep an eye on that one. I suspect we probably are ready to go back and at least test that gap on Akamai as we look at some of these. I wanted to look at Intel real quick. We'd been watching Intel, EIN, what is that, INTC. We've gotten back into this gap today. This thing had been bouncing around the lows on lighter volume. Actually picked up volume on Friday, even just a little lower, and popped back down. They'd warned on their earnings, mostly on a huge slowdown. I suspect a lot of that slowdown is in the PC sector, where people are waiting for the latest Windows 8 PCs. And right now it looks like the next stop down, since we've got some decent volume, would probably be around the $23.05 level from the December 19th low. We have also one at $22.51. But we'll get to a caller here, since we do have one coming in. How you doing today, Mohammed?
Hi, David. How are you?
Another day in paradise. What are we looking at here today?
I just want to ask a general question, and then, specifically on Pulte Homes.
Mm-hmm.
Just wondering, what your thoughts were on the home builders. Aren't they kind of extended as far as their move? And then Pulte Homes, if you can take a look at that one.
They should have broken a little while ago. I suspect that that we've probably seen the height of this. We're still in kind of a little ballistic curve out here. One of the technical indicators I like to use is a displaced moving average, but another one is one called a parabolic SAR. I don't know if you've ever seen that one. Let me see. Retracement Gartley overlays. There we go. And this one may be a little hard to see on Tiger TV. But a parabolic SAR is a good one to actually take a look at and wait for a close back below the line. This one has been on the right side of that for a while. Normally you look for it to crest it to give you an indication that this thing is broken. Ideally this thing's probably going to go back to down to $10.50, maybe $11.50, somewhere in there on that last huge volume day. You got a little bit of a retracement, but I suspect we could see a pullback into that area. A lot of people are just hot. Money managers shoving a lot of money in this area. It may take a while, maybe even until October to the end of the fiscal year, for these to break. So we may have another month or two of these things hanging up here. As soon as that probably fiscal year for a lot of these funds is over, I suspect the end of the rally is going to be over for these homes. The volume's been very light when we look at other things like the IYM, or IYR, excuse me, isn't it? IYR for real estate. Hang on just a second. There we go. Yeah, the real estate index fund. It's another one that's been kind of popping up at these highs and going lighter. You had some nice volume the last 3 or 4 days, but I suspect this is kind of the end or the top of this. You've got, this is September, so you got 50 more days or so, 45 more days to get you into the end of October, which is the end of the fiscal year for most of these funds. And then you might see them starting to dump some of these winners, or at least start distribution in it. So you might see these things go sideways just a little longer because so many of the big funds have jumped into them. What are you thinking on Pulte here?
I was thinking about shorting it.
Okay. Normally when you get a move like this on one side, the indicator I like to use to actually short it is called the displaced moving average. If you put it on a 3x3 displaced moving average and you get basically 10 or 15 candles on one side of that line, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20. So we've got about 20. You'll notice that eventually it'll go below that line for maybe a day or two. It'll go back above the 3x3 displaced moving average for a few days, and then it will go back under it. As a option if you don't have displaced moving averages on yours. You can try a traditional moving average, and let's say like 9 days. So there we go. And you can see that's about the same, or it's close for a 9-day moving average. So wait for it to close below the 9-day moving average for a couple of days. Go back above it, and as soon as it closes below it, pull the trigger if you were actually thinking of shorting it. $14 stock, I'm not thinking of shorting. Are you long the stock now?
No, I was just, trying to see where to get it. As far as the upside, you don't see a whole lot more. I mean, you see more consolidation at these levels, right?
Well, I was actually short the housing index for a while because it literally was so weak. The energy up over the last couple legs has been about 25% lighter each time. So I'm kind of surprised that we're up here and hanging around at these levels. If you go back and look at Ryland, pretty much the same kind of thing. These things are moving in a trend, and a lot of it is because the ETFs and funds owning the ETFs, which then own the actual underlying on these things. I suspect you could have a little bit of pullback on market weakness, but I suspect that we're probably going to see, let's say the market decided to go sideways all the way till October. That's probably where we're going to see the next funds really trying to bail out of these. But I think that this is a hugely over-owned sector of the market right now, especially by the large funds. And until you get them to start dumping it, probably not going to see any weakness in it.
Okay.
But I'm thinking that we've gone far enough in here that these guys are just going to hold it to the end of the quarter, put it in their thing, and then if there's weakness there, they'll start dumping it there. So unfortunately, we've gone long enough. And this is not just the only sector where you have huge winners. With high institutional ownership, a lot of these are very tough to see break until you actually see the end of a year and you get some fund managers willing to dump it.
Okay. Thanks so much.
You bet.
Okay.
Thanks for the call. We're going to go back and look at a few other stocks out here, but we are kind of getting to the end of the year. A lot of fund managers and ETF managers are paid on the end of year where their big bonuses come in, and we're getting into that territory. So it's a lot of times some of these stocks, as weak as they will look, continue to be, how can I say that? Just kind of have some hang time, just like a basketball player up there. Let's see if we have some other stocks here. Cartier, CRI, another one up here making very light highs. We continue to see, less than a 50% test of the previous high. CRI is the symbol out here. We're looking at $57.27 on April 27th with 2.1 million shares. This is the classic W pattern. If anybody's ever looked at it, I'm not suspecting huge weakness in this, but certainly did have a sign that we're probably getting very close to the highs out here. We did see September 6th test and go over the previous high by, a good 40 cents or so, 35 cents, and only come in with 860,000 shares. We may have one more retest depending on market conditions, especially with all the action that we're expecting over the next few days. A lot of headline risk, as they like to say. Don't think this one has the most of it, but I think we're awful close to seeing that kind of highs. One, especially in the housing industry, that has me kind of scratching my head is the possibility that we actually do have an ABC down in Ethan Allen Interiors. They sell a lot of furniture. Let me see if I can get, what is that, 28 bucks? Maybe one more. Let me reset here one more time. Maybe 6 months. No. Well, let me take a look at this again later. Another one we wanted to go to is FistServe. We have a little better sign on this. This one's probably not a test of as high as strong as some of the others, but the last leg up has been kind of weak, which gives me an idea that maybe this one's another one that's topping out. We've got FISV, Fifth Serve, and pretty much high out here from July 5th, $72.93, 880,000 shares, excuse me. We see that go over by a good 30 cents out here on September 7th. Came in with 650,000 shares. We have closed below it, so a decent sell signal if you were long out here. But you know, $73 to 67, not that huge, but we could have some nice trading ranges setting up in a lot of these companies. Hanes Brands is another one that's kind of interesting. It's got a little longer pattern out here, and that is the gap from the last major high, and that was June 19th from 2011. $33.36, 2.6 million shares. It gapped hard down the next day on, what was that, 4.6 million shares. We saw that thing pop down. We finally gotten back up to this gap up. Unfortunately, the volume for those days hasn't been anywhere close to 4. It's about a tenth. We saw 1 million shares on Friday, 441,000 shares on Thursday. As we went into that, not much volume out here, 240,000 shares too. But this is one of those stocks that, to me, looks like it could see some action out here, at least as a lot of these stocks, like Hanes Brands, thought to be a safe harbor in case the economy tends to head back. So if we start seeing the economy head up a little higher here, and maybe good signs from the Fed, we might see these and Procter & Gamble, some of the other what do they call them? Not useful idiots, what do they call it? Likely suspects, usual suspects, like the movie up here. But this one certainly looks like it's up at that previous hard gap down on very light volume. Let's see if there's anyone else out here. Kind of surprised to see LinkedIn in my list showing up. And this one I thought might have enough to have a little abandoned baby or something like that. Certainly a nice little doji up here from Friday, which is surprising, and on extremely light volume. We had it kind of come up to that high. Even then, if you want to use the most aggressive volume, we can look at Thursday at 6.7 million shares against the previous high at 10 million shares. You have, of course, a heavy gap down from that day, which was on May 7th. 4.3 million shares. So even if we use the highest volume, maybe you can say we went in through that gap on that kind of volume. But a kind of a scary little doji out here from Friday, seeing that we're closing again lower but on lighter volume. LinkedIn is setting up to either go much, much higher or break, and I suspect come down to this gap for support at about $97, probably somewhere in that neighborhood before you find a footing. So nice trading range on this thing. If we look at 120, 119 in this range, possibly back down to $97. If it does break above, you could be setting up a huge ABC up as we hit the B point. Maybe volume comes in. Let me see what that expansion would be. If I have anything else. So I want to see 60, 25. Yep, we'll be back. I'll do this during the break, and we'll look at where LinkedIn is going. Looks awful weak here. Let's see if we get some volume come in, though. Let's look at what the upside would be on this.
Are Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We were looking at LinkedIn as we take a look at this, and let's say we do have some volume coming in. This could have a nice large move. It did it 50%, actually a 0.54 retrace back down to the lows at $88 on June 4th, setting up the C point. The D point then would be on just a 1-to-1 would be 148.38. We have so far tested the B point, or the B point on lighter volume though. So could have a nice move up here. Another $28 to the upside if you could get some decent volume. It's kind of I don't know. I like to see the volume actually when it breaks the high come in, not the day before, and then see lighter volume on the day of the break, and then no volume after. Of course, this may just be a artifact of all the news coming out this week, but sitting up here pretty high, not a huge move back down, makes me think that we're going to at least probably see a little bit more action before this thing breaks one way or the other. And probably going to see some news, but it's had a nice move up to 122.85, created a new high, unfortunately on much lighter volume. Wanted to take a look at Apple one last time here before we leave. Had a question in the den. I would suggest if you're interested in Apple, in a lot of the other stocks, I had about 7 or 8 pages of my Tech Insider newsletter devoted to these big 4 horsemen of the technology sector this weekend and what my thoughts were on them. It is rather long and involved. I'm not going to get into it on the show, but you can always go and get a 2-week free trial at TFNN.com and read about it. Got a lot of good responses already from my readers over the weekend, but my guess is my money is not on Apple for the long term. I don't like the way it's traded over the last, especially over the last 3 or 4 weeks. The volume has been fairly weak, and when you look at the energy actually coming in, hopefully you can see this, but the energy coming in is almost about half when we compare the leg up from $361 up to $644. And then the 522 low up to this 682 high. Doesn't mean we can't go higher. Apple has a lot of Apple heads, which are basically they're cultists. There are cult stocks out there, and they get into them. It has very little to do with financials or even the sales. They believe these stocks can drive them much higher than they could ever go. Apple's valuation is not that astronomical. I think what everybody, and especially the fund managers, know is that how easy it is when you have a closed system. They call it a walled garden, to get clobbered. Throughout history, digital equipment, a lot of other companies have hit the boneyard by trying to be very closed in the way that they do their systems. Apple has had a belief that they could close themselves off. It actually violates one of the first laws of marketing high technology in a book that actually is called Marketing High Technology. But it is one of those things. That is a huge market. You cannot be or afford to be alone. Microsoft's always understood that. Apple is the one that's always bucked the trend, had initial early success, and then faded as their competitors decided to gang up against them. Right now I'm seeing probably the weakness in Apple, mostly based on the issues that there isn't going to be a lot of surprises tomorrow. I think that's why people are probably getting out a little early. Maybe there'll be a surprise, but nothing's leaked so far. We will see you again tomorrow and again on Wednesday when we have our guest talking about taxes for traders. You all have a great and safe evening.